Well, ladies and gentlemen, welcome back to the day 2 of the Global Fintech Fest. As we rightly said that on the other side, we're going to be having Banking India at 100, financing growth, trust and a global influence. And we have a great trialogue with our 3 speakers joining us. Let's first of all give it up to Mr. Ajay Sharma, Managing Director and Head Banking, HSBC, who's here amongst us, along with Mr. Binod Kumar, Managing Director and Chief Executive Officer, Indian Bank, and Mr. Vipin V, Managing Director and Partner at BCG. Let's give all 3 of them a big, big round of applause as we invite them on stage. Mr. Ajay Sharma, Binod Kumar, and Mr. Vipin V. Thank you so much. Over to you, gentlemen.
Hello. Good morning, everyone. First of all, let me thank both of you, Mr. Vinod as well as Mr. Ajay, for taking time out today. It's a privilege to have both of you here for this panel. So let me set the context first, and then we'll get started with the discussion. If you look at the next 20 years or 2 decades or so, India is expected to be one of the fastest growing economies, and we're expecting that our GDP will be somewhere around $30 trillion by 2047, which is India at the rate 100. What that means for the industry is that the amount of credit which will be required, or credit penetration or credit growth which will be required to support this kind of aspiration is significant. Today, if you look at the market, at our GDP itself, we are a significantly under-penetrated country in terms of credit, whether you take housing, whether you take MSME, etc., etc. So, for example, housing, we are at maybe 10-12% penetration, which is much lower compared to many of the other developed countries. Similarly, MSME, if you look at it, which is the foundation of our economy, we have maybe $400 to $500 billion in terms of credit gap at this point of time. Now, with this kind of credit, or the kind of credit growth which is expected, it's going to put significant pressure on our systems. Now, to make it more complex, we have other challenges which banks are facing in terms of volatile interest rates, evolving expectation from our regulators, technology changes, liquidity requirements, etc., etc. Now, the mandate for the banking ecosystem in India is very clear. It's about balancing between growth and stability, trust, resilience, etc., etc. Right? With that context, Mr. Binod, let me start with you. Traditionally, in India, public sector banks have always taken the lead in terms of driving financial inclusion, whether it is to retail customers or even to MSME customers. Just wanted to get your thoughts in terms of both from an Indian bank perspective and from the broader public sector perspective. How are you guys gearing up to basically support the rapid growth which is expected for us to achieve our aspirations for 2047?
Thank you, Vipin, and thank you, GFF, for giving this opportunity. So maybe I will little bit repeat the opportunity which is available with us. So our Honorable Prime Minister has given a call that India, we want to become a developed nation by 2047. And I strongly believe we can do that. 1 year here or there, I cannot say, but I strongly believe that we can do that. So what is the opportunity available to us? That means presently we are approximately 4 trillion economy. And by 2047, we will be 30 trillion economy. That means it will be 7.5 times. Opportunity available to bank will be double of this. That means banking assets will grow by almost 12 to 15 times if we have to achieve this. This is from the broader economy perspective. Now coming to your particular, and I strongly also believe 2 things. If India has to become a developed economy, MSME will be paved the way. because the quantum of unmet demand, which is almost 25 trillion with the MSME. So MSME is a one. Second, banks will also have to play a key role if India has to become a developed country. I will touch also a little bit about contribution of MSME. MSME contributes about 30% of the GDP, 45% to the exports, and after IT, it is also the largest employer. Contribution of MSME is immense. But banks are not only, it's not a question of today or tomorrow, banks are continuously gearing up themselves for this opportunity. And I will say it started during the Gyan Sangam when our Honorable Prime Minister in its first meeting in 2015, it started. Thereafter, somewhere in 2018 or 19, each agenda come. So that paved the way for increasing efficiency and resilience of the banks. Particularly to this question, I think there are banks, and particularly Indian Bank also, and all banks are working on three areas. You also touched about the inclusion, so I will not say financial inclusion, but inclusion. Second point, collaboration. And third point is the technology adoption. So we are working on all these areas so that we can meet the demand of the need of the hour, what are the demand coming to us. So inclusion, by inclusion I mean reach. Presently what happens, customer approach banks. Instead of that, we are trying to convert that. We should, instead of proactively identify the potential customer, reach out to them. So we are working on that. Then one of the problem MSMEs is facing is the timely availability of credit. Many banks are taking various steps of that, for that. But I will appreciate one initiative of the government, that is the trades platform. If you see the volume on trades platform, it is increasing leaps and bonds. There, that solved the problem of payment of within 45 days. That is also guidelines of Government of India, that MSME payment is to be made within 45 days. So banks are working on that also. I wish, and also we are encouraging our good customers who are buyers basically to enroll themselves, and we are setting up limits for them to enroll themselves on the trades platform so that their suppliers can get payment on time. We are also working on two things: internal capacity building so that our staff also can understand the importance of the situation, importance of the need of providing MSME. And also I'm happy to share with this audience that Indian Bank has taken one initiative under, that is also, under the guidance of our Honorable Finance Minister. We are also providing training program, we call it Purnata. We are also providing training program to the MSMEs. So these are the initiatives we have taken for inclusion. Second point, now I'm coming to collaboration. Collaboration means in the initial days, fintechs were seen as our competitor. But now we see that as a partner. Indian Bank, we have collaboration with around, we have a system of empanelment of fintechs. We have empanelment of around 167 fintechs with us. They are helping us, they have a great reach, they are very nimble, they are helping us in developing various products for them. They have, and also with NBFC also. We are not also taking NBFC as our competitor, of course, because there are NBFCs who take loan from us and then they on-lend to the customers, and they have wider reach. So they are also working on that. And third point, technology adoption. I believe the banks are coming out of that traditional mindset of lending through only balance sheet lending. Because now everywhere, now customers has so many digital footprints. We are using these footprints to assess the credibility of the customers, both existing to the bank, they already have some record, new to the bank also, from various channels. Various models, various banks are developing, and we are working on that. So I think time is also running out, so we'll close here. 2 points I will make. In Indian Bank, we have set up around 10 specialized MSME branches. We have 14 digital products, STP, where customers need not to visit the branch. 70% of our MSME underwriting is through digital channel, and total out of total MSME book, which is around 1 lakh crore, around 55,000 is digital book. So this is the initiative we have taken at Indian Bank. Thank you.
Thank you, Mr. Binod. Ajay, let me come to you. I think whenever we have seen in the past, we had long years of consistent, aggressive growth. It has always resulted in stress to the system, either in terms of delinquencies or in terms of liquidity issues or higher sector exposures, etc., etc. Now, considering that we're looking at the next 20 years, how do you think of a growth strategy which basically is resilient by design, which basically ensures that the portfolio quality is maintained? We are more, what do you call, resilient to cyber risk. There are various kinds of risks which you are exposed to at this point of time. So how do you think of a growth strategy which balances across all of this? What are some of the learnings you might have which from your organization, HSBC, or your past experience at Citibank, which you can share with us?
No, thank you, and really happy to be here. It's a very vast question. I'll try and make it a bit succinct. So, throughout the history of the world and the banking, ever since it's been there, there's always been a boom and bust, and we have to all, as bankers, live through that. And it's almost that the next generation forgets the lessons the bank has learned in the past, or the banking system has learned in the past. A couple of things give me a bit of heart, which is one, we are sitting, I think, on the cusp of great growth in the country. And as I keep telling my people, growth forgives a lot of sins that you would normally have if there were cycles, you would get caught out. But, we've had 4 or 5 years post-COVID, which have been pretty strong. So it's something to keep in mind and be careful as you design anything as you go forward. Secondly, you look at the India data stack that's been built up. And you look at the fact that we now have a bankruptcy regime that works. You look at the gross NPA in the banking system, and they've been down significantly. So it gives me a lot of heart that, the fact that I know if a customer of mine anywhere in the banking system is overdue, it creates a set of discipline which didn't exist before. So a lot of positives, the way I look at it. But I think coming back to the first challenge is that the size of the opportunity and the size of the demand to meet our country's aspiration to get to 30 trillion, get to 2x by 2030 or earlier. The fact that there's an MSME gap today, which is $500 billion, $500 billion. The fact that corporate capex is supposed to be $1 trillion between now and, these are all crazy numbers, right? And the banking system only has a certain pool to fund it. Now, what are the risks that we are looking at? The risk is the whole frenetic growth. You do bad lending, and it's not us as banks. It's our customers who are equally excited about the opportunity. So, you're in a very narrow niche business doing really well, and you say, this is similar, let me try my luck. It'll only improve my valuation. And our customers will make mistakes too, as will individuals by stretching themselves too thin. And the world is changing, right? So the use of data is going to be fundamental to making sure that the banking system remains resilient, careful, thoughtful, so on and so forth. The other thing is it cannot be done by banks alone, right? So, or the Indian banking system. So as a country, as our rating improves, and we just had an upgrade to BBB, but we have to get to the A's. That's when the big pools of capital internationally will start flowing either into our stock market, into our funds, into investments, into venture. I mean, right now it's a trickle, and the GFF is an amazing place for capital to find opportunities, and that's why we all come here. But the country rating has to get to a stage where a lot of international capital proactively seeks out opportunities in the country, because we just will not have enough domestic capital to do that. So how do we build distribution? How do we, even banks, go out and borrow money in the bond market and, equity capital? SBI did a big deal recently. Partnerships, multilaterals. So everyone has to play a role, otherwise. And by having diversified sources, you create a resilience in the banking system. The other couple of things is really cyber, and that's a risk we all need to be aware of. We you build a digital ecosystem, you are right front and center of risk. We hear about all these anecdotes at an individual level, and they're getting worse, and it's terrible. How do we really protect ourselves and our people to all of those? And then I think the financial inclusion piece was talked about in great detail, so I won't cover that again.
Thank you, Ajay. Let me come back to you, Mr. Binod. As we think about financial inclusion, one of the key things which come under discussion is also the trust of the people in the financial ecosystem or the banking ecosystem itself, because that's most integral for people to leave the money with our banks, right? And of late, there have been many instances where banks have gone bust, and there's always that trust deficit which is getting built, especially with a certain set of the audience, a certain set of the customers, especially in more remoter markets, underserved markets, etc. So just wanted to get your thoughts in terms of what are banks doing at this point of time to build that trust, especially with unbanked population or population who are a bit suspicious with the current ecosystem.
Thank you, Ajay. Sorry, thank you, Varun. So really, I mean, very rightly said, bank is the custodian of money. So entire public money is with the banking system. So bank is basically a business of trust. If it lose trust of the customers, very next moment there may be queue outside the bank and bank may go for a toss. So there are few ingredients, I will say three, I think banks we are doing also. First of all, we are working on the corporate governance, strengthening governance and ethical foundation, strengthening ethical foundation of the bank. Second is enhancing customer trust and engagement. And the third and most important point, as you told, is the customer awareness. Awareness is one area where we need to work incessantly. And coming to the first point, encouraging, enhancing governance, I'm happy to share that now a lot of time goes on the discussion about all these factors, what's happening in the society, how customers are losing their money. So lot of discussion happens in the boardroom, and all banks are strengthening their risk and compliance framework. We have taken help of some consultants also. We have on the board somebody from very reputed organization, I will not take name of organization, who is also helping us in further strengthening our risk and compliance framework. But one most important thing I always talk in my deliberation, like say if I am MD of a bank, my behavior should be, I'm talking on the ethical part, my behavior should be like very ideal behavior I have to display. Because if I have 41,000 employees, every time I am being watched by 41,000 into 2 eyes, that means 82,000 eyes. My every behavior is watched, my decision making is watched, how I am taking decision, that is watched. How much time I am taking in decision making, that is being watched. So and that I emphasize for all the persons who are in the leadership role. They have to display their impeccable ethics so that person down the line, if I am able to imbibe around say 100%, that strong ethical culture, rest of all the things will be taken care. So number one, that thing we are working on that, strongly we are working on that. Credit customer service committee, there are various committee meeting held with the customers at various level. So normally practically what happens, whenever you ask somebody, he will bring only good customers who will talk good about the bank. Very rarely you will say that somebody is talking something negative about the bank in front of the MD or any senior officer. So we have started randomly calling some of the persons in the customer committee so that we can at least have a pulse of the things. Otherwise, we will remain in, unnecessary that yes, our customer service is very good. So that we can have a actual pulse of the things. Then on customer engagement and customer trust. So here I always believe, and also I say in my deliberation, first of all, timely delivery of the service. And customer is the king, and customer is the person for which I always say, why some branch manager is going to the branch and why person is going to the branch. Imagine a situation, no customer is coming to the branch. What they will do? They don't have to do anything. So customer service, I always emphasize on the customer service, and we have also taken some measures for that. Randomly, incognito visit, we are consistently doing incognito visit, and that is also giving good result. And wherever we get some feedback, I have already taken 4 or 5 stern action against the person where I didn't get good feedback. Then also we are randomly, from corporate office itself, I am ensuring, randomly we are making call to on the landline to the branches, whether they are picking or not. Because from my experience, I have seen that branch managers normally also do, though they don't take calls. So randomly we are making call from the branch corporate office to assess whether they are responding or not. So this is on customer strengthening. And still, the biggest thing all banks and we are also doing is customer grievance redressal. All banks have to work on this, because after all there will be some complaints. But if that complaint is resolved timely, at least customer will be satisfied, their problem will be solved. And I'm happy to share that CPGRMS, the initiative of the government of India, that has really served us well in this cause. Almost all the complaints are resolved within TAT of 91 days, unless there are few cases, technical cases, where particularly ATMs. But there also guidelines has come, we have to compensate him within 3 days, we have to make good the money in 3 days. And that banks are following. So customer and also next generation call center. Many banks, we are also coming, many banks are coming, where my emphasis is customer complaints should be redressed at the first point of contact. Instead of waiting somewhere to escalate it to somebody or to some other office, it should be resolved at the first point of contact. And third point is awareness. Really, we need to work a lot on creating awareness. Still, daily we see some news that somebody lost money on account of digital arrest or some time permitting. Will take just a minute. Very learned professor. He lost some money because of somebody. He tried to get call center number of our bank. He searched on the website, he got some number, he called on that number, and then he was duped. So this type of awareness we are creating, we are consistently creating through SMS, social media, digital media, whenever we are interacting with the customers, whenever we are holding customers meet. So consistently we are monitoring, and some few good initiative has been taken, like I4C. I4C is really a good initiative for cyber security, because presently cyber threat is coming to have the biggest threat on money mules. These are the biggest threat for the banks. So we are consistently working on that.
And I liked your statement on leading by example. I think all ethical practices has to start from the top. Then once you set the tone, then I'm sure the next line and next line will follow the same route, right? Ajay, let me come back to you. While we were at the launch, we are discussing the point around multipolar world. So there are no permanent friends anymore. It's all about interests, right? So in that environment, how do you think India can, what role can India play in the global stage? And how can we be a role model for the global south? Or what actions can Indian banks actually take to take the center point or center stage in the global current situation?
So I think couple of areas. One, the kind of tech that India has designed for itself, and how do we take it international? And it's already being done. So how do you accelerate that? How do you have many more countries embrace it? Because when I explain to people who come from overseas, the transfers are free, everyone's got an ID, my phone bill is $5 a month, and people then compare it with theirs, and it's quite amazing in terms of what we have achieved at a base level. And I think the march of technology helps us leapfrog archaic global systems, and therefore, how do we take UPI international? How do we really, the data stack that we have built, if other countries had it, they would give their left arm for it. And so those are the things I think India as a country and the banking system as an enabler has to take international. The other piece is obviously the world's quite complex, right? And things are shifting. And I was at this seminar where Mr. Sindhya was talking, and he said the two things that he learned when he went to his university was change is constant and only the paranoid survive. And I liked both the pieces. And therefore, we have to start embracing and living in a world which has an unbelievable amount of change. It's not going to go away. There'll always be uncertainty. Supply chains were all shifting. Now they'll shift again. We don't know if there's ever going to be a landing point which gives people comfort. And therefore tariffs and, where do you procure? Do you procure near? Do you procure, you still do the old thing? The cost of production in any market, et cetera, all of those models are now up for grabs, right? And then the whole AI overlay that's coming in also creates a level of change. And for me, the only way the Indian banking system can start weighing in more than what it does today is for them to embrace the globality that we as a country will have to do. So if you look at our corporates, and we were talking about India mid-market, every other customer I talk to is buying something internationally, mainly West, mainly Europe or US, to get access, to get technology. So the role of the banking system, therefore, if it is to follow the big customer trends, it has to be then equally for the Indian banking system to go international, embrace the globality that we will have to if we wish to be a 30 trillion economy and much more global, and which also means that where do we get capital from, where do we get growth capital for the country has to be also globally looked at. So lots of changes, but I feel very confident in terms of at least a base level banking system stability is really high at this point of time, and that's the base on which we need to build.
Yeah. No, thanks, Ajay, for that. I think I just remember a few years back, a couple of years back, I was speaking to somebody, one of the bankers in the Europe, and he was mentioning to me that on the tech side, some of the pilots we run in India is bigger than their full scale of operation in the Europe. So considering that our technologies are tested at population scale, and that is something which definitely is worth exporting to many, many other countries which really lack some of those infrastructure at this point of time. Next, let me come back to you, Mr. Binod, on the role of DFIs. So many of the sectors which we are talking about today needs long-term patient kind of capital, which basically is why we have NABARDs of the world or SIDBIs of the world. Now, you spoke about collaboration, so and you referenced them in the fintech context, but I just want to extend that to the to DFIs as well. Do you think what do you think should be the role of DFIs and the banks? Should they work together in partnership, or should DFIs try to compete with the banks in terms of supporting some of these sectors?
I think role of DFI is something different. Banks' role are different. Banks have asset liability mismatch, which DFI may not have. So instead of competing, I will say that we should collaborate. And I have identified 3 areas of collaboration. Number 1 is the syndication. Number 2, syndication, then takeout finance. Unfortunately, that is a old concept, but that has not taken off. And third, in this budget, our Honorable FM has given partial credit enhancement. So these 3 areas we can collaborate. Syndication, they have better understanding of the infrastructure risk, so they can underwrite, they can assess the risk, and then we can participate in that. Takeout finance in both way, where we have taken, subsequently they can take over, or once the project has achieved COD, or they have run for 5 to 10 years, banks can take out that, so that they have another cushion for taking further greenfield projects. And third, it's a new concept of partial credit enhancement. I think they can, and we can also participate jointly. They can assess the risk, they can do some credit enhancement, so that our corporates can take loan from the banks, or they can also raise bonds. So these 3 areas I have identified where we can, instead of competing, we can collaborate.
Thank you. I think we are almost on time. So last question, Ajay, to you. As we think about next decade or so, what are some of the bold steps which either HSBC as an organization or Indian banking system as an organization, as an ecosystem should take to basically leave a great legacy for India going forward?
So, I mean, HSBC, we are the largest foreign bank in India, so we hope to be far larger than any other international bank that operates in the country. And I think the steps we are taking, we feel really, really confident, right? So for us, we look at 3 or 4 trends, right? What does geopolitics and the fact that we need to create manufacturing jobs in the country, what role do we play there? And how do we attract international companies to come into India? We deal with half the multinationals that come into the country in any case. The second piece is how do we really maximize the use of the data stack? That's really, really important for us, and it helps us do things differently. I'll give you an example. I mean, I was in the US, I was talking to a company. They have big procurement plans from India. Can I give you, the question is, can you give me credit risk if I give you a name? And, up to 10 crores with data, I just need the name. I don't need anything else from the buyer except a purchase order eventually. So our ability to use data will transform, and these are the best practices we'll bring and share with our competitors if required. But those are big trends that we have to play on. Thirdly, renewables. I think that will change the way the country works. It reduces our hydrocarbon dependence. Think about our current account deficit, et cetera, and that's how you get to investment grade as a country. So if that continues on the same path, I think huge changes. All of this finally drives the need for capital. So that's what really our strategy is as to how do you play in all these 4 key initiatives. What do I think Indian banks should be? 2047, take your date. Look at the top 10 banks today in the world. How many Chinese banks? Probably 4 or 5. I would think we'll have 3 or 4 banks in the top 10 sooner rather than later. So that is our desire. And that's what we will do as an institution to support the Indian banking system to get there.
That's a great aspiration, Ajay, to have. So let me close with one statement. I think if you look at the banking landscape globally, I think this is a time when Indian banking ecosystem is one of the strongest. Whatever metric you take, whether it is portfolio quality, whether you take ROEs, whether you take the valuation multiples, I think we are punching way beyond what most global banks are offering at this point of time. So I think we have the right foundations in place. I think it's like all of you mentioned. I think it's about us focusing on a set of things which can actually help us fuel this growth for the next 20 years or so that we achieve our aspirations for 2047. Thank you so much, Ajay and Binod, for taking time out. And thanks to the entire audience for being patient and listening to all of us. Thank you so much.
Thank you.
Thank you so much. May I request all our speakers to please proceed forward ahead of the stage and allow us an opportunity to capture them in one frame, #GFF as one word. And to all the audience members, let's encourage them with a warm round of applause and thank our speakers on stage. Ladies and gentlemen, Mr. Vipin V, Binod Kumar and Ajay Sharma. Thank you so much to all our speakers for joining us.